the $1 Million Mortgage Experience podcast. All right, welcome to the show. Thanks for watching. Please like, share, subscribe, tell your friends about this podcast. We're here for you to bring value. But today's guest is Rocco Cortese. He is the CEO and co-founder of Intersection. It's a full-service commercial real estate management and capital markets firm based in San Diego. Intersection oversees a portfolio of retail, office, and industrial properties, and the capital markets group acquires and capitalizes assets. Rocco here has seen and been active in California real estate as a broker since 1987 and has navigated through multiple cycles of commercial real estate while establishing strong relationships with private institutional clients. Thanks for joining me.
Good to be here. Yeah, thanks for having me. This is awesome.
You came all the way from Iceland.
Yeah. Well, I mean, not today, but yeah, it was a couple of days ago.
Yeah.
Had an amazing trip. Interesting real estate up there.
I bet, man. Markets I guess there's a market there. I'm sure you asked about it, right?
Yeah, I mean, there's some industrial, we're big industrial buyers and, that's what I was looking at. But, when you're in real estate, the cool thing about being in real estate is like the whole world looks different to you. Right?
Yeah.
I mean, every time my kids, I used to drive them nuts. I'd be like, hey, stop, I got to look at that building, right?
Yeah.
And,
well, you just look at the world different than a normal person.
Yeah.
Because normal person's just going to be looking at like, oh, there's a McDonald's or there's a, whatever, a shop that I want to see, but they don't see it as like, okay, this is an industry.
Right.
Yeah.
Right. And I always tell people like it's huge. I mean, real estate is like massive.
Yeah.
And they're like, well, what do you mean by that? I'm like, well, look around you. I mean,
it's everywhere you look.
It's everywhere. It's where we live and work and, function. I mean, it's maybe the most important like physical asset.
Yeah.
At least in this country. And, when you think about the impact it has on everyone's lives. And in our company, we tell our people that, we try to impress upon them that, our what we do has higher purpose and higher meaning because, we protect the safety and security of people. People need to do business in real estate. It's critical to their operations. It's critical to your operation. You have this amazing space here.
I mean, if you think about how much time we spend not only just in our homes, right? I mean, we live in San Diego, so we're outdoors a lot. But if you just take that away and just look at how much time you're indoors, you're in the office, you're in your home sleeping. So you're at least in your home sleeping 8 hours, even if you're never home, right? And then you're in your office for however many hours. So we are in a building or a home or a real estate, or just business, so much.
Retail. Yeah, it's really, really an interesting asset class. And, what I think is unique about being involved in this business is really just as we said it a minute ago, is perspective it gives you. So when you go to a place like Iceland, the first thing I'm looking at is like the real estate, like how, for one really interesting thing, and not to go down a rabbit hole, but like the hotels don't have ventilation.
Really?
Yeah,
because it'd be too cold,
right? No, there's no HVAC. It's just they heat the floors in the bathrooms, and they have these little they have the wall units, the electric wall units.
You turn on your own heat.
And everything's geothermal energy there. So, but no, they don't blow air in the hotel, which actually was really nice, to be honest with you. You go to hotels and it's always
get drafted and you hear the sound. Yeah.
It's cool. So,
interesting.
Yeah.
Man, Iceland, I can imagine it is a very different place than San Diego.
It is, yeah.
Different markets, but again, it's a huge part of just economy and, right? The way that they do business, they have to, they have markets there, same as us. They have probably mortgages just like us.
Yeah, they do. They have financing. They're building residential. It's expensive.
I bet.
Interestingly, price, you look at the Cronin versus, the dollar for a glass of wine, and a glass of wine is $17, like it is here. And, it's hard to find industry there. Tourism is massive there for those folks, but real estate's expensive.
Yeah.
It's not cheap. And Reykjavik's small, but it's, it's a major, I wouldn't call it a major international city, but, a lot of interesting stuff has happened there. It's like Reagan met Gorbachev there, I don't know if you remember that. They had their summit there. And so, a really interesting place. It was an awesome trip.
I love the Viking history there. I love Vikings and
there's still a lot of Vikings there.
Yeah. Well, you got into the real estate business a while back, right? Quite a bit.
Yeah.
You've seen a few cycles. Tell me how you got into commercial specifically versus like, residential, or like what drew you to the commercial side of things?
Well, I mean, to be honest with you, I was sleeping on my brother's couch trying to get a job in marketing. And in 1986, when I graduated from college, I graduated from San Diego State University, and I was in LA sleeping on his couch, and he was in commercial real estate, and his roommate was in commercial real estate. He was working for Coldwell Banker, which is now CBRE. And I was having very little luck, and I think they wanted to get me off of their couch, right? So, so his roommate suggested that I go down and meet, think about being in property management, which is something I'd never thought of, but I just wanted a job. I mean, like those were different times. I mean, we didn't have the internet, not to date myself, right? I mean, but we didn't have.
Can you imagine a world with no internet?
Yes, I know, crazy, right? I mean, no cell phones, and so finding a place to getting information, right, was a lot more difficult, and finding job opportunities was really more outbound versus inbound. Like now we just go on the internet and look at jobs, right? Right. Then it was different. So I went down and interviewed with CBRE, and then I interviewed with them 5 more times, and then took a day-long psychological test, which was really a huge barrier to entry into that. I mean, getting into Coldwell Banker at the time was really, really tough, and I was very fortunate to get through. And I mean, again, I'm just going to be really honest here. I just wanted a job.
Yeah.
I mean, I was out of college, and I didn't really know exactly what I wanted to do, and I didn't have a mentor. And then I got into it, and what I found interesting about being a property manager was that it taught me about every aspect of real estate, like the physical components of buildings, the administrative components of buildings like leases and accounting and monthly reporting, and then marketing, leasing and brokerage. How you position your building in the market is critical to a success. So it started with working in LA and just by chance getting into a business that I realized further on in my career was interesting to me for different reasons than I had suspected when I got involved originally. And that really was that I grew up in Calgary, Alberta, and my dad had a clothing store at a high-rise office building. Yeah. So, but I was always downtown, and I used to dig downtown. I loved looking at the high rises too. I mean, I just always
architecture.
Yeah. It was, and it's super interesting to me. So as I got into it, I realized, wow, this is really an interesting thing to be involved with. So
yeah, and you're like a sponge, I bet, right?
Yeah.
Just young, learning about all the different things, and I'm sure it was somewhat interesting, even though some of that doesn't sound, obviously it's like the accounting doesn't sound interesting, to most people, right? It's like
that's why I became a broker.
But the money, like you're like this money that I could make by selling this building or developing a project. Like I mean, it's obviously it's a very lucrative business.
Yeah, it's a great business to be involved with. I mean, I also really liked the community. And, it was interesting because I thought I was going to be in advertising and marketing. That's what was my major. And as I was interviewing in that industry and no rap on those people, my wife's in advertising. It just wasn't that wasn't my tribe. And when I met commercial real estate people like yourself, well, I mean, you're a lender and not necessarily commercial, but like this is a solid community. Right, of people with diverse backgrounds.
Right.
I mean, a lot of people who are in real estate are English majors or come from other faculties in college, and so I just I really was attracted to the community, to people that were in this business, and to this day, I mean, I had meetings today with people I hadn't seen in a while, or met new people that we'd met. We met in investment group this morning, fund this morning, great guys, and met an old friend of mine from there. Everybody's down here for the Mortgage Bankers Association conference, which is a huge commercial real estate.
Right.
It's the big one, and so some old friends were here, and I just built a great set of relationships, and I kind of locked in right away when
that's
I got
cool.
involved. Yeah.
Yeah. So tell me about Intersection.
Our company?
Your company. Tell me like what do you guys focus on, and like how long you been doing it?
So we are a full service, vertically integrated commercial real estate investment management firm.
Okay.
We built our company. We started in 2014. My business partner and I, we worked together back at CB back in 1987. We started our careers together and reconnected when I moved back down here from the Bay Area. But the goal of, when we first connected, it was post, right after the great financial crisis.
Oh,
and
wait.
so we got together around 2011. And after I'd moved back down, I was still working in Northern California. And then, I decided I wanted to really try to build a recurring revenue model versus just being a broker. Cause I shifted after 12 years in property management into brokerage and had my own firm up there in the Bay Area. And so we decided that we would find a niche and serve private investors. And he already had a few private clients, and I had done a ton of brokerage work with the private investor, right? So merged the two, and he was doing property management at the time. I had a lot of capital markets expertise, and started to get some traction with I brought relationships to the table. He brought relationships to the table, and then as things evolved, we found that we were both really well suited to working this kind of client. Like we're very relationship driven guys, and both of us had our time in the big companies and dealing with the larger institutional investors, and I think we're really at a point in our careers where relationships were critical to us. So as we grew that business from a brokerage and property management perspective, a lot of our clients came to us and said, we work with a lot of wealthy families. They came to us and said, "Look, would you guys be interested in like going out and finding some deals for us?"
Yeah.
And we said, "Well, of course. Yeah, sure. I mean,
Please,
it's a great way to grow. Yeah, sign me up.
I'll do it."
And so we had always had an eye towards doing that. So we syndicated our first deal, then we raised a couple of funds. And then, we're selling our last asset in those two funds. We did real well with those. We built an investment management practice that is really the most interesting and fast growing part of our business.
That's cool.
We've done about $200 million in transaction volume since that time. About $100 million in basis. Returns have been great, which is cool. Versus the alternative, right?
Yeah.
Well,
I just love that it's backed by real property and it's backed by income producing assets, right? Versus like, you can always invest in blue chip stocks or in things that are, that aren't going to go anywhere, but you just still never know what the stock market's going to do, right? And we're, if something goes bad, you're still going to have income from an asset. And, it's like, of course there's the deferments and things like that happen sometimes, but at the end of the day, the rents just keep going up, over time. And, they'll go up and then they kind of come down a little bit sometimes. That they over like what, a 30-year span, you're going to be way over, right? Like
construction costs continue.
They go up
long term. So like rents have to go up. And we in real estate, the way the market moves is fairly consistent with inflation. Yeah. Is fairly consistent with, economic growth.
Right.
So it's but it's interesting you were saying that. I mean, I had my little run with Bitcoin and it was up, and then we had this most recent hit, and I got out of it with a small loss, but I keep on reminding myself, like, Rocco, what are you doing? I mean, like, why would you buy Bitcoin?
Do what you know.
Yeah, do what I know. Yeah. And even in my own personal investments, I invest with other friends who have real estate back, whether it be multifamily, development. Sure. I mean, in 3 deals right now, an apartment deal, an industrial development deal with my IRA, which is a great way to invest because I believe in the asset class, and it's really, really, it's what I know, know. And you can, there's risk. I mean, there's a lot of moving parts, and if you get involved with the wrong driver, I mean, that's
sure. Something dangerous. Can fall apart. The deal goes bad. Yeah.
Yeah. So, I mean, particularly now we're in an interesting economic time, but I ascribe to Peter Lindemann's philosophy. He's the former director of real estate at Wharton Business School, and we buy his research. And he's a great guy to follow. I mean, and he has always said, well-located, conservatively financed real estate in the long term will perform. Yeah. And so I'm
a big believer in that.
And I mean, it's pretty basic. That's what we do.
Yeah.
We don't buy fringe locations. We buy in good locations. We keep the leverage conservative, like max 60%, 65% loan to cost. When the pandemic hit, we never had an issue with our lenders, not a single one.
That's good.
And we got through them fine. I mean, we had to work hard. We had to roll up our sleeves,
Yeah.
And but which we had the right team in place to do it. thankful that, we had our property management team and we had our accounting team in place and we were able to support our tenants and our investors and get through that. But we just haven't bumped into anything. And I think, if anybody's watching this podcast and take one thing out of it, like as buyers, well-located, conservatively financed real estate.
What do they say? The three things about real estate?
Location.
Yeah,
location.
right. It's like
critical.
If you get the right location, you're going to be fine.
Yeah, and I see people doing that all. I mean, even if you're in real trouble, even if you've over leveraged, right, you're going to be okay because somebody will buy that deal from you.
Yeah,
because
there's
they
always
want
going to
the
be demand
location.
for that location.
Yeah, and tenants want to be there. You know, even now where the office markets are really in trouble. I had breakfast this morning with a friend of mine from JLL who told me he was financing a building in West Los Angeles. And I was like, what kind of product? He's like, office. I'm like, office? Really? Because that market's been crushed.
Especially Los Angeles, right?
Yeah, LA, San Francisco's awful.
Yeah.
There's going to be a lot of people giving buildings back up there. It's going to be tough. Yeah. And I don't know what's going to happen.
You don't have a crystal ball?
Well, I don't know what's going to happen with those office buildings in San Francisco because, the way a lot of the tech companies have shifted their work of their office and work from home policies to, their policies to work like Benioff at, Mark Benioff at Salesforce built this incredible tower sales. Have you ever been to that building?
There,
It's amazing.
It's incredible.
Yeah. 14th floor is the Ohana floor, right? So it's Ohana is about family and they were all going to be together. And then the pandemic hits and he's like off in Hawaii. I mean, I know some people, I have some close friends at Salesforce and they've got 10% of their workforce in that building, which is sad. They're subleasing 500,000 square feet in arguably the best building in the Western
beautiful.
United States.
Like when you walk in, there's like it almost looks like a waterfall, but it's like digital or something.
Yeah. Then they have they've got all kinds of exhibits on the ground floor, and as I said, I mean that 14th floor is all like it makes you feel like you're in Hawaii, right? I mean, so they I remember when they opened the building, apparently a buddy of mine is touring me through there. Elton John played piano, and they have the piano where he played. I mean, it's a little over the top, right? But I mean, to shift from that to this, I mean, is crazy. So,
well, if 10%, I mean, that's such a small amount of people that are working in this amazing. You're paying a lot of money for the space, and then 10% are only 10% are there, and the rest are all working from home. It's like, why would we be here?
Yeah,
why would we use this? I mean, I know that there's big companies bringing workforces back to the office. Like I think Netflix, I think, is finally doing that, and I've heard of other people doing the same thing. Which I think, do you think that's going to continue? Do you think they'll make people come back, or do you think the remote thing is going to win?
I don't know. I mean, that's a question. That's the dialogue I've had twice today with the people that I met up with, and so here I think the work from home thing is here to stay. Yeah, I think hybrid is really what it's evolving to. Yeah. And so, but then you have Amazon, Salesforce, Google, Facebook, all laying off a lot of people right now. They overstaffed for really what they needed to do during a very, frothy time. So, so they're laying people off, so they don't need as much space as well. So it's kind of a double whammy, right? Yeah. And those tech-driven office markets right now have a conundrum. And so what people are talking about. Converting these buildings to residential, that's like a massive undertaking.
That would be. Have you seen people talk about that?
Oh no, they're talking about it. Yeah.
Kind of like the condo conversions, but way more elaborate, right? Way more work. Condo conversion from a apartment is, you might do a few things, right? But like if you're going from an office, I mean, that's a whole new build out, right?
Yeah, I mean, the problem is really, slab to slab, right? I mean, apartment buildings, I mean, the new ones that are being built do have, lower ceiling heights, but office buildings aren't necessarily, the newer product is not necessarily set up for residential, right? Yeah. But can you imagine taking a high quality office building and going in there and gutting it? Yeah. I mean, how does that pencil? It pencils if somebody sells you the building. Yeah. For $20 a foot.
And no one's there. Yeah. You're like, what am I going to do
with
this?
And it's vacant. So when this guy was telling me he's financing this building, and I mean, they're in Santa Monica, it's like $350 a foot. And from a historical perspective, I mean, that's almost, I don't know. I mean, 40% of what we were pre-pandemic, I mean, $800 a foot, $700 a foot, $900 a foot for, high quality office in Santa Monica. So it's an interesting, it's sad too. I mean, like,
what about plumbing? Like, cause you don't have showers and bathroom. You have like one bathroom for, we have one bathroom for, what is this? Like a 14,000 foot.
Mm-hmm. No,
two bathrooms, a girl and a female, male bathroom.
Yeah. But the conversions are crazy. I mean, you're talking about penetration. So,
right.
50 floors of penetration. So to an electrical, I mean, you're basically going into a building and you're gutting the interior. And then obviously window lines are not set up for residential. So I don't think that's a solution.
Yeah.
And, I've been doing this for a long time. And I was an office guy for most of my professional career.
Mm-hmm.
And I mean, I've said this, post-pandemic, I will never buy another office building again. I mean, we bought two and we got out of them. We recapped one and we're doing a life science development, which is super cool in Sorrento. And the other one we sold to a life science developer. It was up in Carlsbad. Suburban office is interestingly working in markets, east of the West Coast. So like Portland, Seattle, Los Angeles, San Francisco are in trouble. I office downtown. It's it's not very nice down there right now. I have other words I'd like to use, but I don't want you to have to put the explicit stamp on this thing, but it's not great down there. It's bad.
Yeah.
And
I bet.
Yeah, the occupancy's down.
And what's crazy is that San Diego has a lot of movement, right? Has a lot of people relocating from San Francisco and LA. And so it's like, if we're bad and we're in San Diego where there's a lot of relocation, then even how much worse are like the places like Portland and Seattle and, San Francisco and just,
bad.
Yeah.
So, I mean, those are tough. But what's happening though, when I just did, I attend a lot of conferences and I have to follow this stuff and I enjoy following this stuff. And, in markets like Arizona, Texas, they're all back at the office. They're in suburban office parks. They're going to work. I just had a call this morning with a good friend of mine from London who's building 100,000 square foot. He's a fellow EO member. Mm-hmm. He's building a 100,000 square foot project in central London. And I said, like, what? And he said, no. I mean, they're doing the full, what they call ESG there, what we call like LEED certified platinum. Mm-hmm. And he said, we're getting peak market rents.
Wow.
So what's interesting, I mean, maybe people will come back to work. I mean, never say never, right?
Well, don't you think that most people are, somewhat like we're social. We're a social animal, right? Like we need interaction and Zoom. There's only so much Zoom. There's a select number of people that love Zoom. They're just, if you love Zoom, sorry to say this, but it's just one of those things that like, some people like, some people don't, right? But to me, if I could never do another Zoom again, I would gladly never do another Zoom again.
Can't stand them.
Hate them.
Terrible.
It's just delay, it's functional. And if you have to do it and you're, if I'm remote and I'm in Mexico on a vacation and I need to do a Zoom, I'd rather do that than fly back and be in a meeting. But like as a regular practice, like every Wednesday we're doing a Zoom. That just to me is not
cringeworthy.
Not if you're trying to build a business or you're trying to like it's just, I think as social animals, we need this contact and interaction. And there's an energy exchange when you're in person versus like if you're through technology, there's something missed. There's a gap there that I think we don't get, and we don't get that social energy exchange that, whether you believe in energy or whatever it is that happens when you're in proximity to somebody.
I agree.
There's something about like just being alone and being isolated and being working from home, even if you have a nice little dog, like it's still lonely. It's still, there's something, right? So I think that like maybe there'll be this like stickiness to the at home work thing. And I think for certain people that are maybe less social, which you got the introverts and the extroverts, right? The extroverts need to get out and talk to somebody and get energy from that. But like, I think, I'm a big believer in looking forward and trying to figure out technology is going to make it hard for people to work in like this close proximity. I think the technology wants us to be remote because they benefit from it, right? These tech companies, they love us being on the social apps and the getting our social interaction from these apps and from Zoom. But the reality is, I think, we do want to connect.
So, I think so. Yeah.
I just don't know. I mean, you would know better than I, because you're talking to a lot of people, like, and seeing kind of what these trends are. And that's what I'm curious about, like is that
everybody's here in your office?
Yeah.
Right?
I mean,
we mandated that everybody has to come to work.
Yeah. And I think you get more production out of most people, not all. Some people are really productive, right? From home. They can just,
fair point.
Depending on what they do, right? What their job is. If they're an underwriter, if they're someone that just they're an analyst, or they're very much in their computer all day, or in numbers or accounting or whatever. You don't need to be, managed by someone all the time.
Yeah. I mean, we have a third party, like CFO, who's always at home. Right. But here's the way I look at it. I mean, and I have a fairly, I think productivity at home compared to productivity at work is night and day. I mean, I have a friend, and I have other friends, but I have a friend who has a job at a major corp, and she works 2 side jobs while she's working for that corp, and she's at home.
I've heard about this trend. Like,
I mean,
people literally can get 3 jobs, work remote on all 3, and get them all done and get triple the pay.
It's terrible.
Yeah.
Like, I mean, so
it's
you
taking
just
advantage
know
for sure.
It's taking advantage of your company. And these large corps, the smart ones that you see like back in New York City,
right,
who are saying, you're coming to work, we'll give you a hybrid for sure, but you're here 3 days a week, they're like, you're coming to work. And they're saying, they're telling their people they're coming to work because they're smart. I mean, they've been there, right?
Yeah.
And, how do you really grow a career? I mean, this is another thing, for example, it's a trend at universities. I've got a sophomore in college. 2 of his classes are online. And he doesn't even go there. He just goes and he watches the videos at his convenience. And maybe that's the new normal, but I keep on telling him, like, dude, how do you meet? I mean, how do you meet people? Go to class and meet people. That's where I met people in college.
Yeah.
Get out and get on campus. And so he has 3, thankfully he has 3 classes on campus, but I mean, there are so many schools that are doing this now. And I think it's a terrible trend. I mean, honestly, I mean, if I said how I said, it's just super, that's the wrong direction. And things happen in cycles, right? Yeah. So maybe here we are at this point where people are feeling like, okay, we can test out this paradigm, and then maybe they'll shift back to a different paradigm. I mean, there's always change.
Yeah.
And I've seen a lot of change in commercial real estate over the years in terms of, whether it be, ESG in real estate or whether it be, adaptive reuse of office to apartments. I've just seen so many different things over the years.
Yeah.
And there's new technologies, there's new leasing technologies. In fact, what's really interesting, like when I started in real estate, real estate was not the 4th asset class, it's, and now it has become, right. And CBRE and JLL weren't public companies. They were private companies. And now they have they're massive, names on their buildings, and they're as big and important of an industry, an industrial giant in the industry as JP Morgan is banking, right?
Yeah.
And so it's really changed a lot. So I mean, maybe we'll see people come back, or a version of that. But that's office, right?
That would solve the housing shortage if you could turn those into condos.
Yeah, I think so. It'd be interesting. But again, you got to buy these things at there either has to be tax, tax credits, or there needs to be a really good value proposition.
The government's pushing density, right? In certain markets, they're pushing add an ADU. Oh yeah, you can tear this down and build this 4-plex instead of a 1. It's like, so you would see that trend more than like your average mortgage guy, right? So that's interesting to me, is that if you bought a lot with one old house on it, it's on like an acre in a density area where you can easily scrap that house, scrape it down, and then build a 4-plex or an 8-unit. Right, that's a moneymaker, right? Like, I know it's
a good opportunity.
I know I'm in one of your deals where you're doing that, right? Like, what was there before, and what's coming?
It's a life science building. Yeah, we're scraping an old office building and we're converting it to we're building a 40,000 square foot life science project.
Yeah.
So that is a function of great location, that
Mhm.
particular one, and then of demand. And, life science is not the demand profile for that asset class right now is pulled back, but
Mhm.
we're in such a great location there, and we'll be done out of the ground by, I think, right around the time that, we're probably at the valley of the SOFR curve,
Mhm.
and so I think we'll be in pretty good shape to get at least. But it's just a great location. But yeah, that's an example of like looking at how to use a building differently. But that was driven by the pandemic, and there's been a lot of life science demand created by the pandemic. I think
Mhm.
that's a super interesting asset class, but it's also super interesting. Life science biotech is continuing to. I mean, when you start to dig into it, I mean, what it's not just a function of curing disease; it's a function of wellness. It's a function of longevity, right? And
Right.
so the science around all of this, I mean, is becoming, it's on fire. I mean, the fuel is high, right?
Yeah.
We all want to live longer. We
Yeah.
all want to
Yeah. We
look
want to feel
great.
better. We want to,
Yeah,
look great.
right.
We don't want to get old,
Yeah,
all
yeah.
those things.
We want to cure cancer. We want to take care of our parents. We want our parents to live and be healthy, or
Right.
or people who have challenges to be healthy. So it's a really interesting business. But I mean, back to like the idea of converting office buildings into residential. I mean, the one interesting, or the one I guess caveat I'd say is like these cities post pandemic, like this is the big challenge. Why we buy industrial now, because it's such an easy asset class to manage,
Sure.
and but or to to create value with,
Mhm.
because we're not dealing with the cities all that much. And so
Right.
San Francisco, San Diego, we own a property in San Marcos. We took time to get stuff through there. I mean, they're backed up. I mean, like Poway. I mean, all the smaller municipalities as well as the larger municipalities, the planning departments are jacked. I mean, one of my buddies was telling me, and this was about 9 months ago, that he's a leasing guy in San Francisco, that he had a deal he was working on for, and this is crazy.
I
For a
love
tenant,
crazy stories.
that was
I'm
crazy.
ready.
For a
I'm ready.
prospective tenant to take like 30,000 square feet in one of the office buildings that he had listing on, right? And they really need the tenant, but they have to have an emergency generator. They had to build a new emergency generator
Why is that?
just because of the use. The building didn't have sufficient backup power, and they had a high tech platform that
Mhm.
really needed like multiple
In case something went down, you have to.
redundancy
Yeah.
on the backup, right?
Right.
So the city said we can approve that in about 18 months. City of San Francisco. How do you get a lease done, right? I mean, so
Gosh.
there are so many things that are happening. Like it's
Yeah.
not just layoffs, and it's not just work from home. It's also municipalities that are really up against it. And then there's there's a shortage of employment, right? Where do you find
Good
people that
workers. Yeah.
that want to go work for the city,
Right.
right? That's tough, and
Yeah.
it's tough for them. And there are not a lot of people who want to go work for the city and make 60% of what they could make, maybe even tending bar. I don't know. I mean, like, they don't pay all that much. The work conditions aren't great. So, we have I think there's some, for me, there's a couple of black swans in the economy. Like, well, obviously there's a war, right?
Yeah. Does not look like it's going to be, shortening or lessening. It's kind of like slowly ratcheting, it's
Yeah.
like,
And I mean, I think we're all hoping it just goes away, and that like,
Right.
somehow they figure something out over there. And
this is just a line item in the news right now for most of us.
Right.
But like, it's literally like, there's a good chance it could grow. Like, it could grow outside of Ukraine.
Yeah,
I mean,
yeah. I don't even think about it, but
Yeah.
it's real and it's still there.
Yeah.
And then the other black swan, I think, is just labor in this country. I found this last labor report super interesting because
Yeah. Let's talk about that.
517,000 new jobs, right?
Mm-hmm.
And most of them were created in the hotel, and the industry and the entertainment industry,
Travel
like
and entertainment.
travel, entertainment, and the when I say entertainment, I'm talking restaurants, right?
Sure.
And so
Hospitality.
yeah. So, a 500,000 new realtors went into the market over the last 5 years.
500,000.
Yeah. So I think this was a friend
Like
of mine.
residential real estate?
Residential
Wow.
realtors came into the
That's very
national
interesting.
job market. And my sense is that a lot of those people are now back working at the hotels where they came from. And they're
Right.
now back working at the restaurants. Where they, look at the statistics of this last round of job creation. About half of it was in the travel and entertainment industry. So
Well, they're probably the ones in demand, right? So there was the pent up demand during
they have
COVID.
nobody. I mean, think about that. And plus, and this is not a political statement, but in our immigration laws, over the last 4 or 5 years we've historically had a couple of million people come into this country from
Right.
south of the border to take those kinds of jobs, right? To work
Sure.
in the hotels. And and they're not coming now. It's been, quite a while. They're not coming at the kind of number that they historically have. Our birth rate is down.
Dropped,
People
yeah.
are getting older, right? The baby
Yeah.
boomers are getting older. So to me, like employment in this country is a black swan. If the labor pool, doesn't shift, right, and we can't find people to get work done,
Mhm.
then this whole idea of onshoring and reshoring, which is post-pandemic a big economic driver for us, changes, and we have to start going back to other countries. Well, China is not necessarily the solve anymore, right? Mexico kind of is.
Yeah.
So we have some wood to chop on this employment situation in the U.S. It'd be very interesting to see what the next jobs report looks like.
Yeah.
But at 3.6% unemployment, that's like too low.
Yeah. And I don't know how much of that is manipulated. But I certainly know from the feel, like, you get a gut feeling, you get this, like, when you go out, right? And there's just, things are slower.
Right.
You're not getting the same service that we used to get. We're not, there might be tables open, but there's not enough waiters. And so they don't seat you.
Oh,
or,
it's crazy.
So there's this weird time. I just feel like we're in a new America. It's different than when it was pre-pandemic.
100%. Everywhere we go, like all of our locals, you and I live in the same neighborhood, all of our locals, like I have to sit and wait, whereas I used to have, like, there'd be like, the food would come so fast because they wanted to move you out, right?
Right.
And they just don't have people. And
whether it's back kitchen workers or whether it's just, cooks or people to clean the tables or, and there's a lot of demand. It feels like, it felt like we were in a recession, and then it felt like now, there's just all this pent up demand for travel, for eating out, right? Because people are tired of just getting Uber Eats and being at home and just, let's go out and enjoy. And so people are willing to spend money, whether it's credit cards or whatever, to go out and to feel free again now that this pandemic's over, right? It's like,
well, they have a bunch of money that the government gave them.
Right.
California just gave everybody like $600.
Sure.
And so, and that may
which
not
they're going to
sound
tax when the gas tax.
Yeah, right. Exactly.
Here you go, and give it back.
Yeah, give it back. Yeah, but you won't know you're giving it back.
Right.
But you'll feel better for a couple of weeks, right? But that's the thing that I would that I think is, there are, like I said, I think to me labor is like a tricky thing in terms of the economy, but this is like as you said, I've seen multiple cycles.
Yeah.
This is like no cycle I've ever seen.
Yeah.
Because I can't really figure it out. We're
So,
getting
yeah,
whipsawed,
it's odd.
right? So when the jobs report is good,
Yeah.
then the market like takes a hit because they're like, well, now inflation's coming back.
Right.
And I think it was Larry Summers. I read something that he was saying, like, the idea of 2.5% inflation, like what they're trying to achieve, is not achievable.
Right.
And I don't think it is.
Yeah.
Period.
Because they just print money. The fact
There's
is that
too much money out there.
And the fact is that the debt ceiling is going to get hit, and they're going to have to do it again. They're going to raise it.
Mm-hmm.
The fact is they're giving out stimulus. They're going to have to keep doing it. There's just,
we really have a conundrum there. And there are still a lot of funds out there giving companies money. There are still a lot of funds out there. Like I said, people are getting money from the government. And
is that part of what ESG is about? Because I know I don't know how much you know about ESG. It's very interesting to me because you see it a little bit in the news, but you see it on websites. You see it on the big corporations. They're all about ESG. And it's not something that I think small businesses really are kind of like in tune with yet.
No, they're not.
Because they don't have to be. But is there going to be a point where ESG is going to be important to small businesses or required? But like, I think that has to do with some of the money getting loaned out by the World Banks or whoever it is that lends out money. There's got to be an ESG score, and that helps with, I don't know, how much do you know about that? I mean, totally bringing up a topic that we may not even be able to really discuss, but I know you brought up ESG earlier, and to me, it's something that I keep hearing about, and I want to, learn more about it because I feel like it's a trend that isn't going to go away. It's definitely big on the world stage as far as like international and governance for, whether, whatever the trends are that are happening with climate
Europe
change.
Is very environmentally conscious, right, and focused right now. I mean, I think, at least from the standpoint of what they say. Yeah. And I think socially there's a high level of awareness around it. I mean, just in Iceland, huge level of awareness around, environmentally and socially conscious. Yeah. Everything, right? They're a fully sustainable island, right? Utilizing their geothermal energy. And so here in the U.S., I mean, we're our building is going to be platinum, and
when you say platinum, what does that mean?
LEED platinum, like the top level, the highest level of solar, and I mean, it almost have to be nowadays, right? So, to build that kind of product, so we're doing that because we know that. I mean, we could probably be gold and cuts a few corners, but
when you say platinum gold, is that a level that is set for building code, or for what does that mean? Because are you just making that up, or is that an actual?
No. There's platinum, gold, I think bronze. I mean,
and who rates this?
Gosh, I mean, that's a great question. I think that it is an established
through the county.
No,
or
I think
it's
the AIA. I mean, the architectural
and is that a government agency, or is that a?
No. It's a society of architects. I mean, I think it's. I don't think it's building industry. I think it's an architectural certification. Okay. Right, and that is.
Does that give you any tax credits, or does that give you any kind of?
You can do some interesting things like PACE financing, like so long as you have, like you can actually you can borrow money and then bill it
to your tax
through your tax, your property tax. Yeah. So,
so it is a way to borrow money on a cheaper way, or on a way that's not as.
Yeah, I mean, look, it's actually pretty interesting. I mean, we're looking at it for this building as part of our capital stack. I think it potentially makes sense, although it'd be the first time I did it, so I don't know for sure.
And I know you can do PACE for homes, right? Like, so, I mean, when I built my home, we used a PACE thing, and it just was advantageous to do it.
Did you really? Wow.
Yeah. It was for certain parts of the home, like the solar, right?
Right.
A couple other things that were like outside, some of like the drought resistant or whatever, drought tolerant. But I know it's something that in the mortgage business we see, and because it'll be on the tax, like as a forget the term. It's not an easement. It's a Melrose, I think is the term. Have you heard of that? Melrose?
Yeah, no, I know that.
Yeah, so like I think it's interesting to mortgage people because I don't know if there's a trend for that to continue and become more prevalent. So that would be something to watch for.
Yeah, I mean,
is ESG going to kind of like seep into the residential mortgage industry? I don't know.
Well, I will say this. I mean, you made a good point at the beginning of that. I mean, your question. I mean, I think it's really more of a macro thing, larger development
big corporations
work,
have to do it.
Yeah,
right?
and yeah, exactly. It has to be a significant part of. I mean, everybody is. I mean, these large corps have mandates around sustainability and their impact on the environment, which I think is great.
Yeah.
And the mom and pops that we deal with at shopping centers, I mean, they're not even thinking about that.
Right.
But and it's not hugely impactful on your some of the stuff that we look at in the industrial, for sure, not interesting at all for them.
Yeah.
But I mean, not necessary at all. I mean, maybe on a brand new like big box stuff, they're looking at that. I mean, there's a measure of that standard, but it really is more aligned with office and some of the new construction and multifamily, and We have larger retail deals, but it's not a big part of, I don't, it's an interesting aspect of the economy. I think if you're trying to attract great tenants, like in a life science deal,
like a big single tenant kind of.
Well, I mean, a core location like we have, you can maybe get, another 50, 75 cents a foot in net rent. And that equates to, big profit. But I mean, right now where the economy is, I think it's relevant, but not a really important thing. I mean, I think what's really important in terms of commercial real estate, given where the economy is where the debt markets are. And, I mean, you might know a little bit about that business. But, the debt markets are what I think is a really, I don't know how I would put this. I mean, it's a tricky time. And as you know, financing drives commercial real estate in general, like financing. Yep. And having done this for a while, I'm really enjoying it. I really love watching the transition and the movement of these real estate lenders.
Yep.
During a time like this, because especially what's really okay about this one is that we still have liquidity.
Yeah.
I mean, there are still a lot of lenders out there, right? Would you agree?
Yeah, people are lending money. It's just at a higher rate, right? It's like,
but
there's money to be lent. I mean, we're like, where are the people that want to borrow? But it's like our rates are high, and I mean, I say high relatively to a year ago, but like, I mean, they're competitive with everyone else, but it's like, some people are just like, I'm going to wait till maybe rates come back down, but there's money to be lent. If you're willing to pay the rate, it's like the money's there.
So yeah, and rates have come down and come back. I mean, okay, you've been I mean, when did you buy your first home? What year? Do you remember?
97.
97. My first house, 2001, right? And I remember borrowing that money is actually right during, we were in escrow during the tax, 9/11 attacks. And
that would have been scary.
It was interesting.
You're like, whoa, what's going to happen? Should I buy a house still?
Well, we were non-refundable, so there wasn't a real choice. Yeah. But I think I remember we paid, it had a 5 handle on it, like the loan.
Yep.
And then about 8 months later, I refinanced it to 4.5%.
You're like,
yes. I was like, yeah, man, IO, right?
Yeah.
I was talking to my broker, and he said, Rocco, I mean, over the years, I always refinance. To keep my rate down. And so since then, I mean, I've owned 3 homes. This is my third and hopefully forever home. I have a 10-year IO deal at like 2.95%.
Now you're just bragging, dude.
No, but like, their rate's super low. Yeah, but I mean, like, I know, no, it's a good loan, right? But I mean, it's a relationship bank. But I mean, I have a great loan. But I mean, I paid, when I bought my home in Carmel Valley, when I moved down here from Northern California, it was like right after, just as a financial crisis was hitting.
Like 07?
Yeah, so we bought our house like at the end of 08.
Okay.
And I paid 5.9%. Yeah, and I was like, that is what it is. I mean, like, and I bought the house.
Yeah, and I think at the end of the day, most people, they get it. Like, you got to own real estate just to get ahead, right? It's like there's a whole huge topic we could even discuss, but we're not going to. It's too long for this podcast. But we're like, the redlining thing was a big deal for the African American community because they, were blocked out of being able to gain that wealth from owning homes.
Right.
So there's a whole narrative around that, right? And if they were blocked out of owning homes, and so that community couldn't rise with the rest, then like how much so should then everyone be involved in owning real estate? Because there's a whole thing about that. Like, so, we can all become wealthier by owning real estate, no matter what the interest rate is. And especially if the rate's high, you can refinance it down the line and then lower your payments down the line. And especially with rental property or investment properties, like you can get it at 7% interest rate. And then, you could probably break even on that rental if you put enough down. And then, 5 years from now, you can lower it if it lowers, and you keep it going and the rent's going up. And it's just like this magical equation that, obviously if you read Rich Dad, Poor Dad, you would get it. Like, it's just it's such a big deal for creating wealth that so many people miss out on. and they might miss out on because they're like, oh, the rate's too high, or I just want to wait for it to crash, and so there's a lot of people, and I see that the comments on different social media posts of like, I'm just waiting for it to crash. It's going to crash, and I'm gonna get it on pennies on the dollar. And you're like,
yeah, you've been waiting for it to crash for the last 20 years, buddy, and you've missed out an entire cycle. I mean,
and in 08 was what, like 70 years in the making or something crazy like that.
Yeah. And by the way, all the good real estate in 08.
What's that?
Like all the good real estate in 2008, 2009. I mean, those owners knew what they had.
Yeah, and
they didn't sell.
No.
I mean, they figured it out.
The ones that put zero down, that were way upside down in their home, like they were like.
But there was a lot of crappy real estate. I mean, that was stuff like way out in like the Inland Empire, like, or tough neighborhoods here. I mean, look, I would love to have bought 10 houses in like, over in Mira Mesa for $250,000 a piece. I mean, today that'd be great, right? I mean, but there was no liquidity at the time, so people had a lot of money, could buy deals. I mean, I think what's going on now in commercial real estate, at least, is really interesting. I mean, we have debt funds, out there, and then we have banks and local banks. I mean, you probably know this, but this is a really interesting thing that I think is important for people who are watching your podcast. Is Wells Fargo is not lending.
Yeah, they got out of even the correspondent lending. They shut that down.
Well, they've hit their cap. So here's what's happening.
Tell me about this. I haven't heard that they hit their cap.
So Wells, JP Morgan, and B of A are not lending. They're not.
Is that because they don't have enough deposits?
No, because the Fed is telling them that they need to keep their liquidity up really high. So in the case of Wells, which is really interesting, after they had that big debacle with all of the solicitation that they got slapped on the hand.
Well, they were doing some shady stuff.
Yeah, some shady stuff, right? So they have a $70 billion cap on the amount of commercial mortgage financing that they can do. And so there have been nobody's, they're not turning any of their loans because people can't get out of them. Right? And they can't get out of them. So they have zero liquidity. So they're out of the market. Wow. Right.
Okay. So because people aren't giving up that low rate, there's not that normal roll off that happens.
They can't go out. Yeah.
So they can't, they're just stuck with, and is that commercial? And I bet you that's commercial. That's some residential, probably most residential,
right.
if unless I don't know if they're still giving out, home loans or equity lines or anything like that. I don't know, because I know that they stopped doing wholesale, they stopped doing correspondent lending in our world, and so that's an interesting thing. I didn't know if maybe the retail branches were still doing home mortgages, which they probably are, but maybe they're pulled way back on that because of what you're saying. Like, it makes a lot of sense.
Natural churns. I mean, but in commercial real estate, they're out. I mean, B of A and JP Morgan are sitting on, I think I read or listened to podcasts that JP Morgan's sitting on like $1.2 trillion of cash because of the requirements that the Fed has. Like, they're like, you need to keep your liquidity up to ensure that if we do have a banking crisis, that you are not going to be at risk, right? So
they don't want a repeat of 08. We have to bail the banks out.
So they're just sitting there waiting. So when you have them out of the market,
it's a lot of cash that's just sitting on the sidelines.
And they're coming. It's going to come.
You mean it's going to be put into the market?
Deployed. Yeah, I think so. I mean,
in other ways, like what? I mean,
the forward curve is going down. No, they're gonna start lending at some point.
Yeah,
the Fed's going to stop raising rates. I mean, I think I listened to Powell's last speech when he went up, when we raised the rates by 25 bips, and he sounded pretty dovish. I mean, not too hawkish. And then, I mean, maybe this jobs report is going to change things, but I mean, I think, he doesn't want to be the guy who created a recession. And I don't think Joe Biden wants to be that person. And we're coming into an election year. I know, right? We're coming into an election year.
He already has the nickname of Bidenflation.
Bidenflation. Yeah. Well, I mean, yeah.
It just works out too well, yeah. But whether you like him or not, but like.
Well, I mean, it has been, this is such but we just got quoted. We have the regional banks are back. Now, I don't want to name the names of any banks that we're working with, but we have some great banking relationships.
When you say they're back, does that mean they paused?
They were on pause, yeah.
And now
one of the banks we have 4 deals with, and they're like out of the market, not lending. That was probably middle of last year, beginning of last year.
Is that because they were also tapped out, maybe?
No, they were worried about what was going on in the economy.
They had uncertainty.
Rates were getting up, and they were concerned. So they just got they tightened up. They kept the reserves up. Yeah.
Yeah.
Right. And
Uncertainty,
so
now they're
maybe-
kind of like, yeah, things aren't they're not as terrible or like uncertain as we thought they could be. The pandemic's over now, and maybe it's time to lend. And they got to lend. People got that's how they make their money.
They have to make money.
Yeah.
And so we just got quoted, a deal like 270 over the SOFR swap, which is like 6.5% IO fixed.
It's not horrible.
Where I think we can get them to 5 years fixed. It's not bad at all. Remember I talked to you about the 5.9% home loan I had. I mean, on a value add deal that works.
Especially if inflation is at 6.5%,
right?
And you're borrowing it under that,
yeah,
you're not doing bad.
Well, and it's also a signal that we're moving into it. I mean, if you look at the SOFR curve, the forward curve, it's by early 2025, we're in the high twos, right? So people are starting to look forward.
Mm-hmm.
And I'm not like super bullish. I think there's going to be incredible.
We got some time.
Buying opportunities.
There's some it's got to shake out.
And this is, by the way, I should be careful to say that this is for industrial, which is an asset class that is highly sought after.
Right in San Diego.
Well, all over, nationally, and with after the pandemic, the onshoring and reshoring of manufacturing, as I mentioned earlier.
Is that a lot because of Amazon? Do you think, and people buying? Not going to stores, and they need warehouses. Is that?
Well, I mean, so that's an interesting comment. I mean, yes and no. The Amazon effect created significant demand, but as you know, they're subleasing a bunch of their space, nationally. But what happened post pandemic is supply chains got, jacked, and for lack of a better word,
jacked.
They got jacked, and so
you couldn't buy a bicycle, a kayak, a jet ski, nothing,
or paper towels. Yeah. I
mean,
so these suppliers needed to shift their just in time philosophy to just in case philosophy, which means they're taking more space. Yeah. Right. And then we're bringing manufacturing back to the U.S. because of the risk, and we're not in China. I mean, they're just now going back to work. Over there. And so and then they're not the least expensive alternative. It's actually less expensive to manufacture in Mexico.
Yes, I heard, yeah.
And so...
Is that because of the tariffs or because of just the length of time it takes to get from China versus Mexico? Or
and labor costs are going up in China. People are making money, man. I mean, they want, the inflation's gone. I mean, people need to make more money. So, and there's it's, if you talk to people who have, who utilize supply over there, it's complex. It's not, especially post-pandemic, it's been really tough. So they've actually limited, their production has gone way down. That's another reason for it. So industrial demand has been great, and that's an asset class that I think is lenders are interested in. Mm-hmm. But I guess my general comment would be related to financing is that better times are coming. I will tell you one last funny story. As I told you, the Mortgage Bankers Association conference is here, and I had lunch with the correspondent yesterday, and over lunch, nobody is borrowing money from these guys because they're trying to put out 9% money. And over lunch, the guy said, "Look, they wanted our deal, the couple of deals that we're working on, like get us 425 over." And by the end of lunch, actually it was over a drink. It was over a drink. They went from 425 to 325 over.
Wow.
Right. So,
they want to lend money.
They want to lend money. That's how they make money. Right. Yeah. So I think, the fact that there's liquidity, we'll create a little bit of demand. We as real estate people are market makers. I think that's a beautiful thing about our business. Right. We make stuff happen. We don't feed on the economy. We generate activity and interest in the economy. We create activity in the economy. And so, as a result, in the context of being in that business, it's pretty cool to be able to see change coming. Mm-hmm. And as I said, I don't think it's over yet. I think we have definitely choppy times, but I'm feeling fairly positive about it. At least in the industrial, multifamily, retail asset classes. Those are pretty solid. And by the way, the Amazon has created some pretty good opportunities in retail. They've gotten back to brick and timber. So,
well, one thing I admire about you is you do have a lot of network ability. You go out, you meet people, you make friends. This has obviously helped you in your career become successful. What kind of advice could you give someone in the mortgage business if they need to like expand their network, if they need to, meet more people that could maybe potentially give them referrals, or if they can, what can someone do? I mean, you've done this a while, you've seen the cycle. So like in a down market like this, where, the mortgage business is kind of few and far between, the pie is shrunk. Like how would someone like, a mortgage broker go out and, meet people and,
if somebody who's starting today.
Yeah. Or just maybe they've been in the business a few years and they're like, gosh, my pipeline has shrunk. What do I do to really kind of grow that and get more sales?
Yeah. So look, I mean, in our company, we have, I also lead the brokerage team. I mean, I lead the investment business and I lead the brokerage team. And I was a broker for a while. So, I mean, the very first and foremost thing you do is you look at your referral network. I think, I remember one day I was lying in the dentist chair and I was like, when did you move into this space? I mean, I started talking to my dentist about his real estate, right? I never did deal with him.
Yeah.
But I knew about his real estate. So everybody around you, if you're a mortgage broker, everybody around you has real estate in their life.
Yeah.
So find out about it. So
be inquisitive, right? Or be curious. Yeah.
Talk to them. Talk to them about their, so who are the best referral source, period, are the two greatest referral sources for a real estate broker or a mortgage broker are accountants.
Yeah.
And lawyers. Yeah. So who in your network is a lawyer or an accountant? Did you go to
Let's just stop right here and say, if you don't have an accountant or a lawyer in your network, this is the time to go get one and
Absolutely.
Get 2, get 3, right?
Yeah.
I'm a big believer in not just getting one of something, but get 2, get 3,
get
like
20,
get 20.
Just go out and talk to lawyers. Like,
right.
Think about a value proposition for them. But like, I mean, one of the things that, if you happen to go to college, right? Like if you ended up going to, University of Maryland, for example.
Sure.
So you go to the University of Maryland alumni network and you look up every lawyer who went to the University of Maryland who lives here in San Diego.
Yeah.
And you call them.
Yeah.
Hey, I'm an alum.
Yeah.
I mean, how hard is that? I mean, I think right?
That's an open door right there.
It's an open door.
And
every
that
accountant
brings down their defenses immediately.
Right.
And then you talk about the good old days, and then you get like a shoe in, and then you have them for a drink or you go to lunch.
Yeah.
And then
you just say hello. Yeah. I'm a fellow alum.
Right.
I wanted to introduce myself. I'm in this business. So I would say right now, a critical element of building your business is really looking to build your referral network. I mean, this is a time where people are going to want to do business with people that they know, or there's some sort of connection that they trust. And that's really a key element in, and getting a deal done.
That's good. That's how you build strong relationships, right?
Yeah, absolutely.
You have to have some kind of connection, something that you can tie together and just, earn that trust quickly, because time is short.
Yeah, 1, and then 2, be smart, man. I mean, be a student of the market, be a thought leader,
Bring value.
Bring value. When you just call somebody and they say, like, why are you calling? I mean, hey, for example, one of our young brokers and I were talking just before I left today, and she said, well, I don't know exactly what to say. And I said, look, I mean, this is a great time to be talking to your landlord, Mr. Tenant, about, a renewal.
Yeah.
Because even if you have 3 years of term left, they don't want to lose you.
Yeah.
So maybe you can do a blend and extend and lower your rate and really resolve your real estate problem for the next 5 years in a down market. This is the time that you should be doing a transaction if you're a tenant. Absolutely. So look for that hook, right? I mean, the debt markets are terrible. Well, find that hook. Like, hey, I'm locked into it. I mean, that's a challenge, obviously, for your mark. I'm locked into a great loan. Well, maybe there's a HELOC we can do. Or maybe there's another, like, what are your financial needs?
Yeah.
Right. And in any given year, loans are coming due, right?
Yeah.
Yeah. So,
true.
Yeah. So really know your stuff.
One thing that popped in my head while you were saying that is, you were talking about the SOFR, and the prediction is the rates are going to drop.
Mm-hmm.
So when that happens, right, when rates drop, asset prices usually go up. It's kind of like a predictor, right? Like in a way, because you get the financing,
right?
And then the financing allows you to have to pay a little bit more for a project, right? So that's kind of goes hand in hand. Just from my experience is like, you saw the rates drop.
Provided there's liquidity.
Yeah.
Yeah.
If there's no liquidity, you're in trouble. But
liquidity is the key. What I mean by that is, I mean, that's an accurate.
Like if the rates drop and there's money to be,
Of
lent.
course.
Because
there will be money to eat. When rates drop, money comes out. Yeah, it just happens. But like my point in saying that was, and I didn't mean to throw a wrench in the question, but everybody's like, cap rates are driven by rental rates. I mean by interest rates, and that's not true. I mean,
it probably is probably a component of it.
It's but it's primarily liquidity. If there's a lot, I mean, we are buying lower cap rate value.
But if they're willing to lend at low rates, there's probably liquidity.
Oh, of course. No, that's what I was saying. But like, I mean, when rates go up, people think, well, cap rates are going to go up, and they don't necessarily go up.
Yeah.
So I wanted to make that point.
So my point though was my prediction would be that if there's the market's pretty good at making bets. They're not always perfect. They're not great. I mean, they're not great, but they're good at making bets, and they make these bets that the rates are going to drop in 25, right? And later.
Stay alive till 25.
Right? And so that tells me that if you can get into real estate now at a higher rate and you can hold on till the 25 and lower it, this would be a really great selling tool that I would be, if I was a broker, telling my borrowers, like, look, you can get in, don't worry about the rate today. The market's making a huge bet that the rates are going to come down based on the treasuries, right? The short-term and the long-term treasury and the SOFR. Like it's
that's a great,
right. You know what I'm saying? Like that would be a good selling point.
That's a great tactical strategy. Like get into real estate now.
Yeah.
Because valuations have come down, right? I mean, so
they're softening and you don't have to overbid on a deal necessarily.
I mean, everybody's getting these notifications from brokers in your market, like what happened in your market. And values have come down, like 5, 6, 7%. I don't follow the residential market that close because I'm not moving. I'm not looking at a house. But I mean, values have come down, right? Right. So by now, I mean, figure out a way to manage, if you can, the interest rate. Like, can you get through it? Can you work it? Can you
maybe get an interest only, get a short term 7-arm or whatever?
Yeah. Or can you like increase, like, for example, if you're on payroll, can you kick up your deductions so you can get more of your
so then you could afford it, right?
Yeah. So you can afford it. Figure that out, because the real estate, if it's a good value, later you refinance it and you'll be
location.
Yeah. And look, I mean, we all did this. I mean, so many, I mean, like I bought my first house and I bought my second house and I built equity. And now my loan to value is like 30%.
Right. Which is, I mean, that's just a beautiful way. And you didn't get to 30% necessarily from paying down your mortgage.
No, my first deal, I was like at 90% leverage. I mean, my first home that I bought.
You got to that 37% mostly on appreciation.
Yeah.
You probably paid your mortgage on some, but not. It's not like you're, and you may have refied along the way, right? And what always happens is the smart thing to do if you really were playing the I don't want to pay any interest game would be to go from a 30-year fix to a 20-year fix, then to a 15-year fix, right? And then when you get to the lowest rate possible, never refi and just pay off your debt. But debt is also a massively great tool for building wealth. So I think that, to your point of being low on your loan to value, I mean, it's like, come on, like,
why would I pay down my loan?
Yeah.
Do I want to have my entire net worth tied up in my house?
Right.
It's crazy.
That is crazy.
Yeah. I have a loan. I mean, I have a 7-figure loan.
You have a great rate, which you told us earlier about. It's like, that's free money, especially in an inflationary 6.5%. You're paying 2.5%, 3%.
Yeah.
That's free money.
It's really, and if you're a borrower or if you're a broker talking to borrowers, you can show them the long-term strategy of owning and how you build equity in a home. I think that's you made a good point. It's a real critical selling point. And great advisors are great brokers.
Yeah.
Right. They look at it from an advisory perspective.
Yeah. I think if you especially someone you want to stay with and use more than one and refer and recommend that person, it would be someone who is a great advisor.
Yeah.
Because if they're just transactional, giving you a low rate and they don't have any other value, then when the rates go up, you're not really of value.
Yeah.
To that person.
Absolutely. Yeah. Yeah.
So you've been with us for over an hour. I appreciate it. Last question I'd love to ask is, you've been successful, clearly. Are there any shout outs to someone that's helped you along the way?
My older brother. Yeah, my brother Greg. He's been a great supporter of me my whole life. I mean, like, look, I started this tell you I was sleeping on his couch, right? I was looking for a job, and he took me in and helped me out. And he's been a broker for my brother's a very successful net lease broker. And then when I left the institutional commercial real estate business and I became a broker, I mean, he taught me the concept of the wheel spinner. You know, the person who was wasting your time. Oh, that's a wheel spinner.
I call them the time vampires.
Yeah, the time vampire. I just, my brother is a machine. I mean, as a broker goes, I mean, he cold calls every day. He's like,
wow, still
quasi-retired. I mean, like, I'll call him and go, what are you doing? I'm like, I'm on the letter Q or I'm on the letter P. He just has a day when he doesn't have anything to do. He's cold calling. He's calling people and just saying, hey, what are you up to?
Yeah.
Here's what I'm seeing in the market. And he
Staying
just has
sharp,
conversations.
right?
Yeah, always. And he's built a great.
I'm so surprised that mortgage brokers today, they've given up on hustling. A lot of them.
Yeah.
We're like someone like that, like your brother, is an example of someone who just has a what's the word?
It's in his
discipline.
DNA,
It's a
he just
discipline.
hustles.
And it's
he works
like,
from 8 to 5.
You stay sharp.
Yeah.
If you don't, you get soft and then you lose your sales skills. I think over the last couple of years with these low rates, everyone kind of lost their sharpness.
Well, they're taking orders,
too easy.
right? Yeah, it's too easy. Yeah. No, yeah, he's been a great mentor to me. When I became an entrepreneur, he was a great supporter, and then he's my best friend. So he's a good guy. That's my shout out. Shout out to my brother Greg.
That's awesome. Well, he's done a good job to inspire you and help. It's amazing when you really take a minute to think of like, who's helped us, and there's always somebody, right?
There are others too, but if I got to pick one, it's him.
That's cool.
Yeah.
Well, thanks everyone for watching, listening. Again, if you like this, please comment. Please tell us what you like about it, and reach out to Rocco here if you need any advice on commercial real estate. We'll leave a link on how to find you.
Perfect.
But
appreciate it.
Thanks again. We'll see you on the next one.
This has been awesome.
Thanks for coming on.
Yeah, I appreciate it. Thanks, Jon.
All right, buddy.
The $1 Million Mortgage Experience Podcast.